Hey, it's Slay, and this is episode 353 of the Orange Pill Investor. And just want to sneak on real quick. I I've been slacking lately. I'll get signed in here because I've been sleeping in. This not having a job thing is getting my schedule all jacked up. My dogs are old as shit, so they don't wake me up for breakfast no more. They just, as long as I sleep, they sleep basically. And once I get up, feed them, feed myself, I got a decision to make. On my gym days, I either try to sneak off to the gym, but then if I trade, then I made the video, and then it's probably time to eat again, and then I might end up working out or not working out. So today I just said, screw it. I am going to the gym first. So I did all that bullshizzle, and now I'm trying to sneak in and see what the market's doing. There was a bunch of hype because they announced convertible bonds. So, of course, then the price has to tank $10 a share because everybody thinks that it should go up immediately. So, of course, the market does the opposite of what everybody thinks it's going to do. What's up, Howard? Yeah, retirement is hell. Hopefully, I'll make a boatload of money in 2025 and I'll be able to start a couple of businesses or something. Not because I think I'll be able to make more money in business, but there's a couple of things that I feel like a couple of services that I want that I can't get. So I'm just going to provide it myself, I think. Maybe a carnivore, Whole Foods based restaurant, something along those lines. Restaurants probably like the worst business to get into, but whatever. All right, so immediately I can zone in on these 335 calls. I was actually kind of nervous about them because I sold 7 at like what, I don't know, 350 or something. Closed them all down for half, sold 4 more at the money, and kind of expected to get ruined on those. Like maybe the price goes back up to 345 and I'd have to pay to roll. Clearly, that is not the case. And so let's just close these out and keep 500 of the 700 bucks per option. And since I didn't use that cash, I was able to use it to close those down. A lot of times on an up day, maybe I'll buy shares, and on a down day, I'll buy leverage. But here's the problem. If I want to be consistent about this being an option seller's account, I am running a deficit now because I have so many long calls and none of these have covered calls against them. Like even if I wanted to add some, capture some out of the money, 450 strikes is about what? Is that 50% out of the money almost? So that's not terrible. But the net theta on 6 of them is 167. So divide that by 6, 2, 6 into 47. So what is that? 20 something theta. In order for me to make up for negative 500 theta, selling these out of the monies, oh my God, take like 30 of them. I'd have to cover almost every single position. So let's see what it would take if I tempt fate on a Wednesday, just half of a week. Fate on this one was 177. In order to come up with 553 worth, that's three of them. So I'm tempting fate one more time. That almost got me positive. I think I will just deal with that. I know Josh is calling for a couple more weeks of winter. We can call them the Groundhog Day of options. He's targeting like mid March, and that absolutely might be true. But Josh is like I'm a gamer, and I get the feeling that Josh is a little bit competitive, and he doesn't want to just like do well. I think he wants to crush everyone. And he's like the guy that can do Super Mario Brothers speed runs in 45 seconds. I don't even know what a good time is. And the rest of us are just out there trying to not have to use the infinite lives hack to get through the end of the fucking level. But whether it happens this week or in a month or 2 months, I don't mind being early. So, y you could probably if you wanna have his skill set, you probably gotta do the outliers thing and put in the 10,000 hours or something, right? And you can get to that level. But just running covered call strategy is gonna get you it's just gonna make it so much harder to fail than the average investor. I almost kinda feel like it's the training wheels of options trading. It's kinda funny because when you talk to people about selling covered calls or selling puts, they just hear options and they think, "Oh, that's how degens get wrecked." But degens get wrecked buying 2 DTE long calls, anywhere in here really, but, you really wanna be a degen, you're gonna oh, sorry, the other direction. You know, you're buying the 400 strikes because they're only 10 cents, 10 bucks a pop, and you get, "Oh, well, you know what? I can get 100 of these for $1,000." And then it expires worthless, and then you do it next week, and you do it next week, and you do it next week. That's how the average, um, options noob loses money. But when you're selling covered calls, you really kinda have to screw up pretty bad to lose money. Because every time you sell a covered call, you're reducing your cost basis. So while you're studying, uh, guys like Josh, and you're studying how guys like that do what they do, you can pretty much just run this strategy and make money and get your feet wet. Um, yeah, I think that's the message for the day. And actually, before strategy came along, that's all I did. All stacking all of these long calls is definitely a new thing for me that I adopted basically since Quant Bros 1. Once I saw how insane this trade could get, I kind of I kind of my eyes kinda glazed over and I was like, "Oh my god, I have to have as many long calls as I possibly can." And there actually wouldn't have been anything wrong with that, but I should have cut all of this leverage down by 75% in November based on the huge high IV rank numbers that we were seeing. So, um, I'm still trying to get my emotions in control trading this way. Trading just covered calls is just easy peasy. You get some shares or you get a poor man's covered call, you sell a call against it, and when do you take profits? When the damn thing goes, when your covered call strike goes in the money. You just That's your take profit signal. The shares get called away. If you're still bullish, you can sell cash secured puts and get in. And just running the wheel is just kind of like, I don't say it's a cheat code, but it's definitely easy mode. And before strategy, I was pretty agnostic about what I traded as long as the premiums were good. And so I'm being seduced by the dark side of the force, I think, by even before I wouldn't even allow myself to be bullish on a stock. I was just completely emotionless. Um, anyway, that was a nice little tangent. I got 10 minutes left. So I don't like that this is still negative, but it's like right on the edge of positive theta. So I'll probably have to continue to, and really if you look at it, it's half a trading week, right? It's hump day. And I collected $600 on a 320 strike. That's still 2% return on capital for half a trading week. So there's been a lot of people saying, "Oh, the premiums have collapsed." Like, if I pulled up Apple right now, I bet you couldn't get 1% at the money for a full trading week. Let's just see. Is it AAPL? Yeah. I'm gonna be generous and go all the way to next week. So this is a week and a half. Yeah. You can get barely 1% for 9 days. 2 trading days is like half a percent, a little more than half a percent. So even with the premiums being as low, implied vol has been as low as it's been for like an entire year. To a certain extent, this is just a guideline. This is just kind of um it's a metric that can be useful, but the real number is how much can you get paid? And is that return on capital worth it? Getting 2% for half a week, if I double that and got 4% a week, that's 200% for the year. Now I think by not covering most of these positions, I'll do better than 200% for the year. That's kind of insane to think that I could take guaranteed profits of like 4% a week, 2, 3, 4% a week. And that's kind of bearish with where I think strategy is going. Now, Josh could be right. Bitcoin could shit the bed and hit 84. If that happens, I mean, we're springboarding, big time. So I don't know if we're going to do the diving board to 125K or whatever, or if we're just going to grind up. And to a certain extent, I guess it kind of doesn't matter. But all right, I think that's the only thing I need to do in this account. Yeah, these are all not ready to roll. And I'm just gonna, this is not much cash. I'm just gonna leave this 3 grand in here to, actually, you know what? 3 grand. I probably need to spend some of that because, well, I don't know. If this goes in the money, I might have to pay to roll on Friday. We'll leave 3 grand there. Cash is trash, but this is Misty. That just does nothing. Got another month to wait for. I saw a guy's channel. He covers all of the yield max, and he was kind of critical of the plays that MSTY was making, and I tended to agree with him. I should give him a shout out, but I can't remember. It was shared under my last video, I think. Yeah, nothing to do here. Yep, this covered call is still even Stevens, nothing to do there. This one, I'll probably need to roll down. Not expiration, strikes. Roll the strikes down to what did I roll the other one down to? 325? I rolled down to 320. I'm gonna try the hack that let me scroll up and give K4. Let's try to do this. So that's a working order. I thought there would be a W here. So okay. So I was anyway. This is gonna awesome K4. This is gonna save me so much freaking time. So before I was going to the positions and then we're scrolling down, just kind of pain in the ass. But looks like before that filled, I could have just hit replace. So that was gonna be awesome. Confirmed. I will never forget it. All right, let's check. This one is still worth a pretty penny compared to what I wait. Do I still have something else checked? Okay. Yeah, nothing to do with any of these. And I won't sell these shares and add more leverage until, if this cracks 300, I'll crack another 100 shares and buy 2 more leaps. That's the plan. March is coming up on the 1-year anniversary of my 5K challenge. So I set this account up with 5 grand in March something. March might have been right here, like March 20th or something. Anyway, somewhere in March, I set this up with 5 grand and ran the wheel strategy, basically. At one point, I got this up to enough where I could start selling Poorman's covered calls in MSTR. And so you can see I just barely have a couple of little mining stock positions left over. So I'll keep this going for another month just to see. Hopefully, I can end this on a high note. It reached its peak in November naturally. So I'm like down 50% since November, but it's still up 3x in 11 months. So that's not bad. And yeah, no trades really to make in this account. All right, let's check the chats and then call it a day. Snuck in some trades before the market closed. Howard says the market didn't start to tank until after Saylor's institutional pricing call. That's positive, I think. Maybe it means that a bunch of people heard the proposal and decided to buy the convertible bonds and shorted. Yeah, and I can't remember. I know there's different bond investors. Some of them, the gamma traders, I think, are the ones that once they take that position, they immediately short it, so there can be some negative price uh, initial, downward price pressure. I think with those. So I don't know if these guys are gamma traders or not. So we'll see. Hodel says Josh is an option savant. Yeah, I agree. I actually when 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 I got a message saying, "Hey, do you want to join the True North show?" I was like, "Well, hell yeah!" And then when they when they told me who all was gonna be potentially in the thing, and I saw that Josh was one of the people, like I literally got physical anxiety because I thought like, holy shit! Like if he just starts running, gamma delta, blah blah blah, and starts talking about stuff. And he's like, "Oh, obviously this and that," and I just have to be like nodding my head, going, "Oh yeah, obviously." Like everyone's gonna know I'm a fraud, but it's been fun. Even if I'm sitting there and Ben is talking over my head with convertible bond shit, or Adrian's going over my head with quantum shit, I can just, you know, I can just class clown it up, even if I have nothing useful to contribute. Um, but yeah, I think what I do, at least I I hope that gives people a glimmer of hope that you don't have to be a savant to make a little bit of money. All right, Buffalo says sold the March 21st 330 when Josh sold the 340s. I've collected 60% of the premium, buying back soon. Excellent. Congrats on that one. What's up, Even Keeled? Finally made it live. Glad you could make it. All right. If you got any more questions, we can do an AMA or whatever. Otherwise, we'll call it a day. Let me look and see. Is there anything? So my plan for the future, if the market gods are listening, I'll sacrifice whatever I need to. But I don't know if it's going to happen in March, April, May, whatever. The next strategy pump that we get that looks like March or November. We had like a 4x in 5 weeks for March, and then if we just go to November, we can say literally in 3 weeks it doubled. Or if we want to go all the way back to September, right before this started to grind up, we could say in 2 months it went 4x. So anywhere from 4 to 8 weeks, if we get another 4x moment, I'm probably going to have to take off like, I don't know, 75% of this leverage. Let me take a look at these January 890s, because I bought these right in the middle of that January FOMO. So these have just been getting destroyed. So January 890s. For me to profit or even break even on these damn things, what is it gonna take? January 2026. I've got the 890s, but they cost me 162. Good lord. 162. We can just look at one of them. We'll do an implied vol of 120. Well, let's see what the default is. Default implied vol is 90, so let's go to 120. So if we get an April pump, let's just do April 16th. For me to be green, I need a price of 585 at least to be able to break even on those bad boys. At that point, I would probably take it. To actually make some money by April, to make anything significant, I need like 600-700s. So there's plenty of green here. I'm not really worried about them, but I'm also not going to play the revenge game. So if we get IV anywhere over probably 80, IV rank that is, which would probably be an implied vol of like 120-ish. Or higher. I mean, if this is pegged at 100, then I'll be selling covered calls. I will be, selling to open covered calls, and I will be selling to close calls that I bought. To me, the decision-making criteria is identical. If it's a good covered call selling environment, then it's a good long call selling to close environment. And yeah. So that's kind of the plan. But I wanna end the year maybe with 3,000 shares, and that has no math. There's no math in that. It's just that in March, before my shares got called away, I had 300 shares pre-split, which would be 3,000 shares now. So that is a little bit of a revenge fantasy that I'm trying to play out there. But if I can't swing it, I'm definitely going to use Tesla as a pairs trade against my strategy shares. I don't know if my portfolio is gonna be 50-50 or 60-40. If, if strategy pumps to some insane number, 1,000, 1,500, 2,000, something like that, I'll probably go to, like, 40% strategy, 60% Tesla, as long as Tesla hasn't gone moon yet. So I'm hoping to sneak into a Tesla position when strategy is going nuclear and Tesla has not completely, gone crazy with like FSD approval and cyber taxi insane profits. I don't know if that's going to take another year or two to happen. So if all the stars align, maybe I'll be able to make some money in Tesla as Bitcoin and strategy enters the bear market of 2026, 2027. So I'll be selling heavily, covered calls against strategy, regardless of whatever the price is over the next, 2026, 2027, and probably stacking Tesla shares and maybe even leaps or whatnot. Same strategies, but just having two stocks instead of one. I'll be fully diversified into a two stock portfolio. So Deckard says, how much money do you need to start selling a safe performance cover call? So maybe you can explain what you mean by safe. I appreciate that you put it in quotes since there's nothing safe. But in general, people that are selling poor man's covered calls want to go with at least a 0.7 delta. So that's like borderline safe though, because if the price drops at all, now you're not at 0.7 anymore. So 0.8 is probably a little bit safer. So if we're gonna go a year out, unfortunately, there's no March of 2026, but going to June 2026, 0.8 delta is approximately, the 225. And this makes sense because it's usually about 50% of the share price. You're usually able to set up a poor man's covered call with about half the money that it would cost you to buy 100 shares. And right now it would cost, basically 32 grand to buy 100 shares, and you can get the 225 strike in June 2026 for half of 32 grand, 16 grand. And then at this point, the short strike that would go with this, I use this website formula right here. And I'll put this in the chat. And so to ballpark it, I would probably add the value of this with the long strike. That's 325 plus 60, 385. As long as you're selling around the 385 strike, maybe even the 375 strike, because you get to add the premium to that. Oops. Doing 45 days to expiration with poor man's covered calls is a lot safer than doing the weeklies. Like if I try to sell the 385 for not even this Friday, but next Friday, you're not gonna be able to collect much premium here, but you could. You could get, like, 0.5% a week or something. But going out to 45 days to expiration and going to at least the 3 being super greedy, you could do the 375, or higher. Anywhere over that would be fine. And I generally try to target, like, 1% a week, and 45 days to expiration short calls I manage every 2 to 3 weeks, so I usually take 1% and then multiply it times 4. So I would probably wanna collect $1,280, which would put me right between some of these bid-ask spreads are pretty wide. Yeah, like a 415. Yeah, if I was setting that up today, point 0.8 delta on the long, and then the 415 strike. And if you're using Robinhood, you can kind of see the nice little graph that it forms, and that's kind of like a double check to make sure that you're not doing something stupid. What did I say? The 225? Yeah. I'm sure you can look at the graphs in Tasty too, but I haven't really figured out how to do it yet on the web-based version. So if the graph looks like this, where there's a bunch of green here, and this slope is not very steep, this is kind of like a double check. And the reason why I say that the weeklies are so hard, like if I just tried to sell 9 days from now and I'm like, you know what? I want to collect $1,000, 325 strikes. Whoops. Yeah. So now the green is very small, and you can see that if the price of strategy goes over 433, you start losing money. You don't want to see this. So Portman's covered calls, you have to be very careful about your strike selection. If you own shares, you can sell any strike you want. As Josh himself demonstrated, because he's actually selling in the money covered calls, which sounds insane to me, but judging by the price, I mean, he might be all right. Buffalo says True North tonight. I assume so. I haven't heard that it's canceled. We might be freestyling because normally we talk about that stuff on Monday. But there's plenty to talk about. All right, we're all caught up on the chats. Thanks for tuning in.